With the rising role of technology in the financial industry in the past decade, technology has also become an important transition enabler. In the upcoming panel, speakers will share how we can leverage on technology to address challenges faced by financial institutions and corporates. They will also explore new business opportunities brought by technological advancement during their journey to net zero. Moderating this panel will be Ricco Zhang, Senior Director of Asia Pacific of International Capital Market Association. Ricco, please. May I also invite our panelists to the stage. Ho-Yin Lee, Managing Director, Head of Technology and Communications, Asia North and Australia, Asia South Investment Banking of Citi. Christine Low, Chief Development Strategist, Institute for the Environment of the Hong Kong University of Science and Technology. Rahul Narang, Head of Investment Banking, Asia Pacific of Natixis Corporate and Investment Banking. Benedicte Nolens, Center Head, Innovation Hub Hong Kong of Bank for International Settlements.
Thank you, everyone. So this panel can be very interesting because we have heard a lot of things about the transition finance, and this is a hot topic in Asia. But from technology perspective, we haven't discussed this a lot. In recent years, as you know, the green sustainable finance has experienced significant growth, capturing the attention of regulators worldwide. Here in Hong Kong, the SAR government, along with the Green and the Sustainable Finance Cross-Agency Steering Group, is dedicated to fostering a robust sustainable finance ecosystem, with the green fintech playing a pivotal role. One of the key initiatives is the centralized green fintech map, as you know, developed collaboratively with the steering group, Cyberport, and InvestHK. This resource aims to illuminate the various green fintech solutions available, helping corporates and financial institutions navigate the landscape as they pursue their ESG targets. These green fintech solutions are technology and data-driven innovations that designate to assist organizations in meeting their ESG goals, managing ESG-related risks, and facilitating transition to a net zero economy. We at ICMA has made a significant strides in this area, particularly within the classification of solution in green and digital finance investment and the ESG data intelligence and analytics of the green fintech map. A notable milestone was the Hong Kong SAR government's issuance of first green digital bonds by sovereign issuers. It used the ICMA bond date taxonomy. This development holds the potential to revolutionize information exchange across financial system, enhancing transparency and efficiency in the capital market. Additionally, the Hong Kong ESG ratings and data product providers voluntary code of conduct, developed with support from the Hong Kong SFC, aims to establish a globally consistent framework for ESG ratings. The consultation was released in May, and the final version is expected to be released actually within this month. As we delve into our discussion today, let's keep in mind that the role of technology as transition enabler is not isolated. It strives on collaboration between public and private sectors, between innovators and regulators, and across regional boundaries. ICMA actually was quoted in the last panel a couple of times, and we are very active in the transition finance, particularly from the bond space. As you know, I'm a bond guy, but I don't have any technology background, so probably they put me in this panel just to throw out questions as moderator. But we have a full house of experts here to answer those hot topics within the technology and also the new opportunities emerging from these advancements and the importance of collaboration in fostering innovation. So maybe without further ado, let me turn to Christine first. For corporates, data gap is a major hurdle in transition planning. So how can we leverage technology to bridge the gap?
Maybe I can actually go a little bit further. It's not just corporates. I think for governments, for cities, data is really important. And there's a lot of data around. Many of us have certain types and quantities of data. The thing about data is, what do we do with it? So if I were to just start with the corporates for now, obviously everybody is very interested in ESG and, can we scope 3, can we collect scope 3, and then we're having to deal with SMEs, and then, gosh, in Hong Kong, we have 300,000 SMEs, what a big headache, can we really do it? And I think many other economies are asking the same sort of questions. Now, of course, the regulators are interested because quite rightly they've signed on to ISSB, sort of ambitious targets, right? But between now and when scope 3 data has to be there, are we really going to make it? And then the thing is, you can either say, well, let's get some consultant to fashion something for us, but these are guesstimates. So if you really want the data, you have to go to the original source, which means, again, these SMEs. Now, talking to the SMEs, because we've actually been talking to the SMEs recently. HKUST, where I'm from, we worked with SFC and HKMA, and we've kind of produced this carbon tool that Eddie mentioned. Now, the thing is, the carbon tool, by the way, it's nothing too special, right? Because many people have done these calculators. But the thing about this calculator is very specific to this area and region. So that's number one. If you go to a consultant, if they haven't done it this way, it's kind of generalized data from somewhere. The second thing is, how do I get an SME to use it? So we actually reached out to SMEs and say, can I teach you how to use this, right? It's really, really simple. Okay, they say, 20 minutes, I now know how to use it. The next question is much more difficult. Will you use it? Will you use it? Completely different kind of question, right? Well, what incentive is there for me? Now, they're not looking for money. What they know is that their clients, or maybe even their banks, might be asking for this kind of stuff, but they want to know, what is that interface where I get maybe some mark on it, so that they can go and verify and, go through that process. So this is now psychology of people. And you cannot use technology with them. It's about literally rallying thousands of companies, right? Question, who is going to do that? So we've created the technology, is there? Somebody in government, maybe not even the regulators. Now, so once you have created this tool, which we know works, is it something that Hong Kong wants to collaborate maybe with Dubai? And I think the interesting thing is, we're both not so big, but not so small, but if we could do this, it is actually quite unique. So what I'm really saying is, there is certain types of original data where you have to go to the source. You can't just get a consultant to give it to you. Doing it is a real hassle, but it can be done. So the second thing I also want to talk about is, corporates and regulators and government want data on climate risk. So again, that is about climate risk in specific places. So that means the climate risk of Hong Kong, for example, or southern China, that could only really come about from serious work in the region, right? Because your regulators, your investors, your bankers want to know, my property out there, what kind of risk will that face? So again, you need local people to do that. Again, how can we share that data? We have that data, for example, at HKUST, but we need to work with the financial sector, the regulators, the government, to be able to get it in a way that is then unified. Can you imagine if Hong Kong had one set of data that can tell you that all the banks, all the investors can use, and say, those properties over there, those infrastructure over there, actually that's the climate risk. Because what I have seen is talking to Bank A, they say, well, our people have produced that kind of risk. And they're not quite sure whether it's right. Bank B has done exactly the same exercise with their people, but same property, different physical risk. So then the idea now is, and it took us a couple of years to get here, can we have some unified risk for a region as a whole? And I think if Hong Kong and Dubai can do that kind of thing, because we have the we actually know what to do. But to actually do it, right, to get the research going, to actually do it, put it in a way that the financial sector can use and governments can use, I think that's really what the challenges are.
Thank you, Christine. That's actually very insightful about this data and precisely the risks. And I have to point out, obviously, there are different data providers out there. So it's important to bear in mind we are about to release our code of conduct on ESG rating and the data. So just to bear with us, and by the end of this month, we will release the final code. Let me next turn to Ho-Yin, because from the financial institution perspective, how to measure and manage risk is very important. So how can financial institutions better use technology to basically address those challenges?
Yeah, actually, so Christine actually mentioned a lot of it, which is I think we have been looking to do more and more financing around green initiatives, right? As a bank, we've committed $1 trillion. Our target is to lend or facilitate $1 trillion worth of financing for green initiatives. And one of the key things that we need to work on is really around data, right? It's around how do you understand, for example, when we speak about transition financing, how do we understand what the impact of these different companies are having, right? Not just through the company itself, but also through their supply chain. And having, this currently requires, each corporate, particularly up the value chain, including the SMBs, to really do their own tagging and data production. And that is really one of the areas where more can be done and more is being done through the helps of, everyone who's attending this conference. I think one of the ways that technology will change it, of course, and we love talking about technology. The other big topic aside from climate transition that everyone likes to talk about these days is, of course, AI, right? It's really around data, AI, analytics that will improve the way that we understand the impact that each company has, right? And I think it's important, and we've seen a number of startups try to tackle this problem as well, which is how to embrace the technology to really help with reporting.
Good. That's also down to the disclosure matters, which are also relevant to the data. So shift a little bit and let's hear about in addition to the challenges, we also want to explore opportunities. So maybe I turn to Ricco. I note in the Texas Investments Mosaic of 2024, AI, transition, Middle East capital have been identified as some of the key trends for MA. What are some of the transition-themed investment opportunities enabled by technological advancements worthy of attention?
Sure. Thank you. So first of all, just on the concept of innovation. Innovation doesn't have to come through technology, i.e. computers. Innovation can be done by human beings. The technology boundaries can be redefined by human beings. And at least for us at Natixis, the green weighting factor is a representation of that. Proprietary, in-house, developed after 24 months of work. And it's where we have committed to take our entire balance sheet and allocate a weighting factor to that. Now, the impact of that is it holds us accountable, and it also holds and provides very good metrics for the trajectory and transition journey of our clients. So it's a very powerful way, which is actually cascaded through the firm so that everybody's empowered to use it equally because it was not imposed, it was co-developed. And that enables a lot of journey for transition. But now on the investment mosaic that we put out early in 2024, the themes, we spend a lot of time thinking about two mega trends in there, which are captured in Ricco and what you said. So first of all, we think that the Middle East, China trade corridor is a significant opportunity. In this today's world of heightened geopolitics, the G2G connections matter. And where we see flow of M&A activity or investment activity, we've taken our Chinese clients for investments in Middle East. I think more of that will happen. We have also seen Middle Eastern liquid investors put money into corporate bond issuances in Asia Pacific particularly when they are of green nature. So we think there's more of that to be done. Second theme that we spend a lot of time on is transition. Now, we're obviously here talking about net zero and climate transition, energy transition. But there's also a very big transition that we think is happening in the world. There's two big ones. One is the technology transition itself. There is new design language that we literally are being faced with today. And we want to spend time thinking about that. And then there's the society transition, which incorporates aging. And a lot of that actually impacts Asia as well. So when we think of transition, we want to incorporate all these factors and see how it interacts with the traditional sectors. And then within the sectors, we, of course, want to project the locus of what the green transition looks like, along with technology transition as well. So in the context of opportunity set, what it really comes down to is where do we see technology-enabled investment opportunities? Let's call it M&A first. The obvious one is renewables. It's been there for a while. Achieving grid parity was a very big inflection point. But now the ecosystem also requires remote battery energy storage systems where we see a lot of capital that can be going for investment. The EV charging ecosystem and the EV ecosystem, let's call it the entire EV ecosystem. That is where there's going to be significant amount of global flows going in. We think that low carbon public transportation, we think that sustainable aviation fuel type of solutions, sustainable food are other sectors where we see a lot of investment opportunities. Perhaps the biggest one that will impact all our lives is that intersection of technology, particularly AI, with the capability to process that AI, which is data centers. And in data centers, most people don't think of it, but the need for green electrons and the need to have water solutions that make a data center green and more is really, really critical, particularly as all of us, while using ChatGPT, which we cannot do in Hong Kong, but the ChatGPT solutions can actually be requiring a lot of power and information.
Good, very interesting, because you also touch on the real economy, how to use technology to help transition those sectors. I think this is super relevant to both Middle East and China/Asia in this region. Let me turn to Benedicte. On the product instrument level, new technologies may help making the issuing, trading, and the settlement more efficient and less costly. So what are some of the latest developments we should watch out for?
Thank you very much. So I've been listening with much interest to all these discussions, and obviously renewables, EVs, etc. These are very leading trends. For the perspective, though, of this question, I will focus on the intersection with finance, specifically, like which technologies can be used in the context of finance. And in that regard, we were very pleased, actually, to work with the UAE at COP28 together with the BIS, and we launched the COP28 Tech Sprint. And we focused on 3 technologies, which we think are the leading technologies on the intersection with finance. One is IoT, second is AI, and the third is blockchain. As you mentioned, AI is very important, but to do AI, you need the data, and it is IoT devices that are actually tracking those data. So what we see on the grassroots is that there is already an enormous evolution in the adoption of IoT. For example, for green buildings, there is an enormous application of IoT devices. These devices generate data. That data can be processed through an AI approach. but it can also be combined, for example, with a blockchain approach in the context of carbon credits. So I will focus in this regard just quickly on two projects that we did and one that we're doing. So the first suite of project, we called it Genesis. And it was focused on playing, as Eddie put it, a catalytic role. It was trying to show out there what could happen in 10 years to 15 years' time. It was not saying this will happen tomorrow. It focused on tokenizing green bonds. In this case, they were meant to be government green bonds, tokenized, combined with then tracking by IoT of the carbon credits that are being generated through the renewable investment. So it is really a combination of different technologies. One is the tokenization itself, which can lead to fractionalization, which is useful for retail investors, but it can also lead to the connection to smart contracts, which means auto-delivery of certain outcomes. In this case, we tested it with carbon credits. Again, the IoT devices are there to monitor the production of the carbon credits, and the blockchains are there to be the provenance for these carbon credits, because one of the problems with carbon credits is that they're not all created equal, as you know. And you do need this provenance to avoid misuse of carbon credits. So that was one series of projects we did. A second project we will now be exploring, as Eddie alluded to, is to look at the use of e-bills of lading and the digitization of trade, or what Eddie called sustainable trade mechanisms. So sustainable trade goes together with digitization. It is a very long journey and a very difficult journey because trading documents are many, many different documents. But I would say from my understanding, which is still, of course, increasing by the day, Asia is by far leading on this development. So you don't see the same focus on digitized trade in certain other parts of the world. So we definitely can continue this leadership. And once you digitize things, you can also link it, for example, to transparency on supply chains, which I will come back to later. But maybe just a few overarching thoughts. First of all, often I feel I'm doing project by project, just chipping away at things. And I think we all feel that way. We're all committed individuals, but we feel like we're just moving the needle by a very small amount. But at the same time, if you look at it in a more optimistic fashion, when I look in this room, there are many familiar faces. So, for example, Eddie has been committed to green for a long time when leaders were not sticking out their heads in the regulatory community. And it's the same also for Ian. I had this discussion with Ian at an event which was focused on green. And Christine was one of my first contacts in Hong Kong while I was introducing this topic of ESG back then in the securities regulator. So there is an enormous power of people. There are many that I can't mention, actually, half this room, or the whole room maybe. So it is a very long-term commitment, and it requires what I call staying power. So let's keep with it, and let's keep chipping away, even though sometimes it will feel very limited. But in aggregate, in 10 years, I think we've made material change.
I mean, I don't know how it is in Dubai, but in Hong Kong, I want to really emphasize what Benny has said. A few years ago, when we started talking about all of this stuff, we all felt we were not very knowledgeable. We always felt somebody knew more than us. And but I think today we have kind of scrambled around, right, a number of years. And we all kind of said, oh, well, I only know this, I don't really know that. But today, I think we have kind of stepped up. And the question that we want to ask ourselves is, maybe take a look at what we have achieved, where we are, and how we can deepen the collaboration. And I mean, you know, if I just take a very simple example, we're looking for opportunities to invest in, right? And Emily talked about looking for places where maybe Western capital will find it easier to invest in. Well, just look outside. I mean, this is like full of potentials with buildings in a place like Hong Kong. But we don't know what is the potential for retrofitting and decarbonization. But actually, some of our geeks have now developed tools to actually do that. And we've been talking to not the financial regulators, but other regulators, the government development bureau in Hong Kong, right? So they have expressed an interest in just understanding what's the potential, because then you can slice and dice and say what kind of buildings, their age, and knowing their age, we have some idea of how they were built and so on. So you can do a fairly accurate estimation. Then I think we need to put together this group of people who've been looking at different parts of the elephant, right? And whilst we know each other, we haven't actually designed and curated on a continuous basis how we solve those problems. And I think in the last two panels, we've actually articulated a lot of the gaps, right? But none of us can solve it on our own, but we need to have this kind of newer alliance to answer the kind of questions that Emily talked about, right? And maybe with blended finance, with multilateral bodies, with other philanthropists and so on, we can then think through this huge opportunity out there. And I'm so glad you talked about aging. We have a problem in Hong Kong of not just aging people, but aging buildings. And I suspect many other cities have this problem, right? So retrofitting buildings for well-being, for the health of our people, for environment, for decarbonization, should be a really big business for the urban areas. But if we don't connect all the dots, I think it's hard for private investors to come and do it, both in terms of mitigation, but also adaptation, in terms of the climate risks that we all face in our particular regions.
Thanks, that's a very good point. And I have to say, I must give credit to the Hong Kong government and all the regulators here, like Hong Kong MA. To be honest, I think Hong Kong represents the high-end Asia standards. That's actually very advanced compared with the rest of the world. But bear in mind, we also have a lot of emerging markets in Asia. And as the financial center, Hong Kong obviously can play a very important role to address this gap. As Christine just mentioned, and also as a financial center, we obviously want to provide such financing opportunities to the real economy. We have talked a lot about the challenges and opportunities. Now, next, I want to touch on what we should do next to enable really the technology-based transition finance. Maybe I just turn to Ho-Yin first. How can financial institutions influence and assist your clients for this decarbonization journey, and particularly by using technologies?
Yeah, so I think almost all, if not all, of financial institutions are committed towards decarbonization, right? Everyone's put out different targets. What I think is important is, what's interesting is we see obviously public and private partnerships. We heard from the previous panel that investor interest in this area is extremely high. And so what we want to do is obviously make it easier for our clients, for our corporate clients, for them to measure and to really document what these emissions are, right? Because in that way, we can do not just sustainably linked bonds, bank debt, but also move on to more transition financing, which we saw in a previous chart, is very, very small today. I think it is important for us to work with companies that are willing to spend the time and really thinking through these issues. And we've done, at least in the tech, media, telecom space, we've worked with companies, for example, of China, out of Korea, on a sustainability linked, as well as green financing. And as anyone knows, it is project by project, because you have to go, it's very detailed and very bespoke and very customized for each company in terms of how their business operates and where they can reduce these emissions, right? And so we'd love to see, obviously, more frameworks and more capability to spread it out, so it's not necessarily 100% bespoke by company, but has a little bit of transferability. And that way, hopefully through technology, through the IoT devices that were mentioned, reducing that friction cost, reducing the friction around creating these type of financial products, hopefully will continue to spur further growth of financing.
Sounds like really time-consuming, and I assume technology can help a lot. So, Christine, let me turn to you again. basically you previously as a policymaker, so basically provide us an angle that what's the right incentive to develop, to use the technology to further development?
I think we need something sexy to excite the market, because I think in the bowels of government, many generations of highly technical people, they don't have to think so much about money. They get allocated money for public jobs. But money is more scarce today, so even they are more interested in talking to finance people. And if I were just thinking about Hong Kong, but it may be the same for other authorities, can we imagine, for example, that the Hong Kong government actually has a large pool of money for their public buildings? And Hong Kong has 8,000 public buildings of various sizes. If you think about museums and hospitals and offices and so on, the public sector has a lot of buildings. All these buildings have budgets, at least for some kind of renovation and upkeep and so on. Actually, that's a lot of money. Now, if the people who are in charge of the buildings were working with HKMA and the financiers and so on to actually think through how they might use the savings from electricity to help them perhaps finance some other types of buildings in Hong Kong. Because we've just said that if you're the government, it's more than money, right? You need to retrofit your buildings for public social good, because you cannot have buildings that starts to deteriorate. You actually have social problems. The private sector may not be interested in investing in that. So what I'm saying is, how can we be more innovative and imaginative? Even government, when they save money, that they can calculate ahead of time, right? That they can then invest maybe that money to help to de-risk perhaps large-scale retrofit in Hong Kong. So now, you might say that's a crazy idea, Christine, right? But what I'm trying to say is, we need the convening for this kind of discussion to take place. So maybe HKMA would be a good one to link this kind of discussion together. And I think on technology, there's a lot of technology we know that we can already use. Right? We're not talking about inventing new technology. The bit about, I think, credits, we now have Asian-based institute here. I see John Lowe sitting at the back. So again, defining even Asian-based or emerging market-based, what kind of credits, how to do it, could also be helpful. So there's just so much that we can now ride on to take something forward in Hong Kong that, as you said, links to the rest of emerging markets, that I think is potentially really exciting.
Thank you, Christine. That's a big task. Let's not load all the burden on HKMA, because we have other government bodies in Hong Kong. They should do their job as well, at least to escalate it to the steering group, for example. But that's interesting, and that's super relevant particularly to this part of the world. And let me turn to Benedicte again. Multilateral institutions obviously also very important to help the whole journey, and how they can make use of this convening power to foster the international collaboration.
Thank you. I'll keep it short because that clock is ticking. So primarily for the BIS, it's three ways. So first of all, we do standard setting, and I think several of you have referred to the BCBS standards. So that is, if anything, still the core power of the BIS. The second one is innovation, including research. And innovation falls within the BIS Innovation Hub. And there we do, as you can hear, several projects that are focused on these difficult aspects of green. They tend to be focused, of course, on novel technologies because we are the innovation hub. But they serve a little bit what Ian, I think, called a clearinghouse of ideas. I think it's a very good word. And also we do public-private partnerships. partnership. So all these projects are executed with the private sector, including with quite some of you here in the room from banks and also from non-banks. One project we have ongoing right now that Eddie has alluded to is called Symbiosis, and there we will explore the use of AI for the purpose of Scope 3 calculation, in part to create that more inclusive outcome where these SMEs don't need to fill out 10 forms for 10 different parties that they work with. But secondly, also to work in the direction of transition finance, because part of this project will involve open sourcing a piece of code where in some different data feeds on Scope 3, it's not dependent on one vendor, can be fed into the model and can be used for the calculation of transition finance. This could then be connected in turn to banks, specifically digitally sensitive banks, for the purpose of providing transition finance. So again, call it a catalytic project as opposed to something that will be immediately implementable. But I am sure that once people see how this could work, that one or more will adopt it. And then lastly, for the BIS, of course, there are things that we do ourselves. For example, we are building a new building. It's very important to build it green. And as you know, we do manage the money of the central banks, so we do have financed emissions, aka Scope 3, and we need to calculate that ourselves. And then maybe I just want to say as well that we've had extensive collaboration with the UAE. I mentioned before the COP28 tech sprint, but recently we did conduct a series of roundtables on these three technologies, AI, IoT, and blockchain, with the UAE, in particular with CBUAE. We also are continuing to scope future work, and importantly, as you know, we're also working on Enbridge, which after all is digitization of trade as well, and involves also the UAE. So that's it from my side. Thank you.
Thank you very much. I think that's very important, such international collaboration. This is also what we do at ICMA, to really create such a platform for different stakeholders to work together and have a more international consistent standards applying for everyone, actually, because money flow actually is cross-border anyway. So we need to have such unified standards, and particularly for the financial market to function well, giving such financing to our real economy. Last but not least, also, I'm conscious about time. Let me turn to Ricco. We haven't forgotten Dubai and the Ian and their colleagues. Let's talk about the financial center roles, particularly when we sit here in Hong Kong and are talking about the corridor between Dubai and Hong Kong. So how those financial centers can play and work together to create such ecosystem.
Thanks. Look, I'll be very quick, and I'll give you an answer that you will expect, and then I will give you a vision that you may not expect. So first, the answer, three things came to my mind. One is regulatory support on standardization, alignment, the interoperability of taxonomy, right? The second point on information sharing, obviously regular convening of sessions like this, understanding priorities, co-developing priorities, more importantly. And the third one is capacity building, right, for joint skill development. Now, you can expect this, that between Hong Kong and Dubai, we can do this. All of us in this room are committed to doing that. Now, how about a vision, right? Because we're talking about technology, right? So can we imagine a tech-enabled platform? I don't know who does it, but it would probably take more than one party to do it, that has that solves for the problem that we're trying to solve for, okay? The problem is when you have fragmented markets, when you have geographical dispersion, and when you have information asymmetry, what that all means is less deal flow. So we got to eliminate that. And the technology, we are fortunate now that today technology is at a point that will enable us to eliminate that market failure. So imagine a tech-enabled platform that has all the case studies that we can put about how we help clients go through transition. We have capacity building training programs where people don't have to fly to go to a classroom, but can actually online get the benefit of international capacity building and training sessions. Imagine a place where we can list all the good experiences in doing this kind of work, what we have learned, what is good, and what we have learned that should be avoided, right? A compilation of all that. Imagine that same platform that has all the due diligence materials, the transition risks that we have seen post-investment, the integration of ESG frameworks when you combine two companies or two entities are coming together, the valuation metrics, and on and on. And all of that being captured on a technology-enabled platform. It's possible. We've seen that happen in other sectors, in other environments. So what if we could do that for what we are trying to solve for? Thank you.
Thank you. I think capacity building, etc., is very, very important. Also, personally, I prefer personal engagement and always the physical meetings, but I understand that sometimes it's difficult and the virtual means obviously can work. If you don't mind, let me just give them one more suggestion. I understand we're gonna rotate for such nice events, and the next will be in Dubai. One suggestion, Ian, maybe Eddie, and also Daryl, bring this exact group of people to Dubai next year, and let's continue the discussion. And at that time, I will promise, I want to explain why at ICMA we don't have transition bond principles. So yes, I think now we come to the end of the session and want to conclude the discussion. And please join me to give a big applaud to my panelists, and thank you very much for listening.